Well, hey, everybody. Welcome to the March edition of Deal Talk. Hey, I'm Terry Luker, and today I have Jeff Luker here with me as well. So we're kind of in our corporate offices, and we just want to talk a little bit about today, Jeff, about what's going on in lending and what you and I are seeing out there. So what are you seeing, if I can just jump right in, with our SBA lenders right now?
Yeah, I think right now, we use such a wide range of SBA lenders that there's no, hey, what are we looking for specifically? I mean, as we know, everybody's got a different appetite. But I think the biggest thing is there's a lot of requests out there, and they're looking for, clear and concise requests and loan packages. The better information you can have up front, the faster we can get an answer. And as we talk about all the time, sometimes a quick no is better than a long drawn out maybe, because it lets us go on to the next person. So, I think they're looking for clear and concise requests so they can quickly see what we're looking to do.
Yeah, I think the big thing with I'm seeing, even with some of our community bank lenders, is they don't want to have to guess.
Mm-hmm.
They want and I think you're going to talk about a deal spotlight later on in this, but they want a clear package, so they're not having to guess, well, what are we really trying to do here? Are we lending money for this or that or whatever? And I think that's where sometimes brokers struggle,
Yeah.
about being clear and concise about what the actual borrowing request is.
Yeah, absolutely. I'm a big fan of the Michael Scott quote from The Office. Explain it to me like I'm five.
Yeah, that's probably a good idea. So, I think that one of the things you can say when you're looking for a way to set up your packages is, one is making sure that the capital stack is clear and easily understood.
Yep.
That the use of proceeds is clearly defined and it's tied to a repayment ability, that we can show that the borrower has the ability to repay, right?
Yeah, absolutely. I mean, I look at loan requests every day for our direct lending that the property doesn't cash flow. And it's real easy. It's, hey, what's my debt? What's my cash flow? Let's plug it in real fast. If it's a 1-to-1, at least, okay, well, now we can start asking some questions. But I get them all the time that they're making half as much money as they need to get to a 1-to-1. And the broker just hasn't asked that next question to see it. And again, like we talk about, both with our lending and with SBA lending, there are times that we can use projections. So if it's not at least a 1-to-1 or, somewhere around there, then let's talk about what we're going to do. Are we building up to where we get to projections? But a lot of times we're not asking the questions to get to that point to be able to provide that additional information.
Yeah, I think that goes into the next statement I was going to say about the financials reconcile cleanly with the story. Like you said, if they're not at a 1-to-1, but there's a good story and that we can show the story, well, the financials have to even back up the story, right?
Yep.
And too many times, well, it's, I heard one of our credit analysts got a call from a broker this week and said, well, you don't need all that stuff. We're doing an asset-based loan. Yeah, we are doing an asset-based loan, but guess what? We still underwrite it, right?
Yep. Yeah, absolutely. One of my other favorite ones too is, well, he can show the income on the P&L, but he doesn't claim a lot on his taxes, so he can't show it there. Well, that's
Yeah,
it's not really a good explanation that you're just not paying taxes.
yeah. As a lender, we're not interested in that
That's
deal.
right. That's right.
So, you got to make sure the documentation supports the claims. With follow up. If they're saying, this is what we got, then we ought to have it. I like the PFSs where they've got $2 million in liquidity, and you ask for proof of funds, and all of a sudden, they can't provide the proof of funds. Well, that's because their PFS is probably inflated. So we
Yeah.
need to make sure that brokers understand that you got to be able to document, what the facts are.
Yep. Yep.
So,
Absolutely. Yeah. Just
yeah.
ask that next question. Another good one on the PFS is the life insurance. If they're 28 years old and they have a $1.5 million cash value life insurance, that's a term policy. That's not cash value. So,
Yeah.
look through the documents and ask that next question just to make sure.
Yeah. And that comes from years of experience, I think. And, a lot of times brokers just don't stop and slow down a little bit. And I really see, that what we're seeing in 2026 is that the first hurdle is not credit, it's clarity. And I think if the brokers would slow down and understand that I'm going to get asked all these questions, let me make sure that I understand it before I just, send it to a lender and say, hey, can you do this deal?
Yep. Yep. No, I completely agree. I think that's the biggest thing that we're looking for is, clarity. What exactly are we trying to do? And then we can quickly say, yes, this is how we attack it, or I know it's not a fit because of this, but maybe look for this type of lender who can help with this. Yep.
Yeah, I think one of the things that I find interesting when I'm talking to brokers about a deal that we're looking at for our lending company, is that, I ask them, well, how are they going to pay us off? And a lot of times I get the phone just goes silent,
Mm-hmm.
because they're not sure, because they haven't gone far enough and asked their client, their borrower, okay, well, we're going to get this bridge loan. It's going to be for 12 months. What's the plan to pay off the bridge loan? And to us, you and I both know this, but to us, that's one of the important things we evaluate is
Yeah.
how are you going to pay us off? And if they don't have a plan, it really doesn't matter how valuable the asset is, how great the borrower is, because we don't want to be in a loan, for more than one loan or maybe another 12 months. So more than 24 months, we don't want to be in a loan, right?
Yeah. And I think part of that too is having a solutions mindset versus a transactional mindset. If you look at each deal of, hey, let me just get this closed and I move on to the next deal. I mean, you can make commissions that way, but you're not building lasting repeat referral business. But if you look to your borrower and say, okay, we're going to use this tool for a bridge loan. Now, what's our next step? If you approach it that way, not only are you helping the borrower do what they're really trying to accomplish, but you're also setting yourself up for future closings and future commissions and things like that. So it's all about that mindset of providing solutions.
Right. I think we need to become more of, like you said, solutions providers instead of transactional relationships.
Yep.
One of the things we've seen in this first quarter of this year, I think you might agree with me, is that there are a lot of lenders out there that are actively funding deals.
Mm-hmm. Yep.
But what they're looking for now is no longer the volume. They're looking more for the quality,
Yep.
instead of the quantity. So they're wanting to work with brokers that are bringing them a quality deal, that they can, that it's understandable. They know what they're trying to accomplish. All the things we just talked about, more so than they are for the just, hey, just send it to us and let us see. I think just submit it and we'll see what we can do days for banks, as I've been talking to them, really are over. I mean, they're just wanting to work with people that are going to bring them quality deals instead of quantity of deals.
Yeah, I mean, I think as a broker, it's our job to make the lender's job easier. We've
Yeah.
always looked at it that both the borrower and the lender are our clients, and we've got to serve both sides of that. We had a lender tell us recently that whenever they submit their package to their credit committee, they just copy and paste most of our package. So, our credit team does a great job to make us look really good, and they help make the lender's job a whole lot easier, both for quick decisions and for when they submit it to loan committee.
Yeah. Think about this when you're looking down at your phone and somebody's calling in and you see that broker, who sends a clear and concise package, you're excited, because that's probably a deal that we're going to be able to, get towards funding. And then you got the opposite effect of that when you have that broker that's always telling you how to do your job and you don't need all this and that. You look at them calling, you go, oh man, I'm going to let that call go to voicemail.
That's right.
Guess what? Other lenders are doing the same thing.
Yeah.
You've got SBA lenders that they've got brokers that send them real good packages. They want to take that call. They want to talk to that broker. But then you've got other brokers that send deals that aren't clear. They're not concise. They really don't know what's really going on. And those lenders don't want to spend time with them because they feel like they're just wasting their time, as they try to train this broker how to put a, quality deal together.
Yeah.
We see that a lot. Would you agree with that?
I would completely agree with that. And the other part of it is, I don't mind helping a new broker or helping educate a broker, any of those things. But a lot of times what you get is an argument from the other side. It's, hey, if you can get me X, then I can, well, why do you need that? Well, if you can tell me this, and I go, well, I told you, okay, yeah, but I need the full picture and I need to understand these things. And for these reasons, and instead of getting a response of, okay, great, let me go get that for you, it's, well, I don't want to provide that. And then they just move on. And, who knows what happens to the borrower's needs from there.
Yeah. Or they just stop talking to the borrower because they can't get it funded because they don't know what questions to ask. So, talking about a little bit about what's in the news right now, we saw in the Reuters and the Federal Reserve put out a commentary in February of this year that they surveyed the bank lending officers and that bank lending officers are expecting a strong demand for business loans across all categories this year. And that should, really encourage our brokers out there. And I tell people that are wanting to come into our industry, we've been told by Moody's, last December, that in 3 years, our industry should be a $3 trillion industry. Right now, it's a $1 trillion industry. With that kind of growth, man, if a broker would just dig in and learn how to put together, complete, concise, detailed packages, I mean, it's a time that a broker could make hay. It would be just a great time to be a broker, wouldn't you think?
Yeah, absolutely. And look, there's a lot of hurdles in the market. There's some uncertainty in certain places, but I think there's also a lot of pent up demand. And so there's also more tools than ever, to go through and figure out how to help a borrower. What can I do here? How do I educate myself here? I mean, look, we had an inquiry the other day that was an asset class in a rural area that I honestly, when I first looked at it, thought, man, there's no way. And I used Chat GPT and found some information, and I was like, okay, maybe. And so then I called an SBA lender, and he's like, yeah, man, we do that all day, every day. So there's so many tools out there too to help you be more efficient and educate yourself quicker and just do all those different things right now.
Yeah, I think that's important that we get them to learn that, because we're also reading that lenders are saying, the same thing. They're not constrained by having capital. They've got plenty of capital. There's no capital constraints.
Yeah.
But what's constraining them is their underwriting capacity, that they're not going to add, more underwriters. They're not going to add more processors. They're going to stay with what they got and just focus on quality deals.
Yep.
And so, if you're out there and you're a marginal broker, you're going to get pushed to the side. You're going to run out of lenders that are willing to talk to you, because there is going to be a lot of activity. There's going to be a lot of deal flow. So, if you're a broker out there and you're struggling, maybe reach out to us, and Jeff, we could talk to them about our online training program that we've got, that they can do at their own pace, on their own time, at night or whatever. And then we can talk about, our in-person training that we provide, for our brokers, that really would give them access to our back office too. I think one of the best things that we ever did is when we put together our back office, our credit department, because like you said earlier, they make us look good.
Yeah, they do. Yeah.
Yeah.
So, and the other thing too with the in-person training is, not only do you get the back office, you get a year of mentorship too. So it's not just, hey, underwrite my deal for me. It's okay, now that I've got the deal underwritten, where do I go? Who do I talk to? How do I overcome these objections? All those different things that frankly we've been through, that we can help them get through. Yeah,
exactly. All right. So let's move to and talk a little bit about our lender spotlight this week. Our lender spotlight is going to focus on South Star Capital. So let's talk about the current appetite and the focus that South Star Capital has. They do AR, accounts receivable financing. They do invoice factoring. They do purchase order financing. They're also involved in some DIP financing, which is when you have a client that's in a Chapter 11, and they can help you with that. They have asset-based lending solutions. They do financing on government contracting and payroll funding. So they're in a lot of things that it would benefit you as a broker to really look at South Star Capital, figure out what they do, get to know the folks over there, and then, figure out what deals you have that would be a niche for them to be able to send it to them. Some of the industries that they focus on are manufacturing, consulting, government contracting, staffing, distribution, and transportation. So that's a pretty wide range of market, wouldn't you say, Jeff?
Yeah, and it is, and they're a great partner for somebody like us, because they cover everything on the balance sheet that frankly we don't cover. We like unsecured by real estate, or maybe some really, really heavy equipment, and they like that more unsecured space, where they can do that AR and things like that. But they're not an MCA lender, so it's a lot friendlier terms, for the borrower, and things that they can manage a little bit better.
Yeah, and they're a great team to work with too, and we're really excited that they've been a part of the Commercial Loan Brokers Association now for the last couple of years, and we do appreciate that. So I think we have a deal spotlight, a deal that you want to talk about. I'm excited about that.
Yeah, it's a deal that we funded last month, and it honestly came from one of our favorite brokers. He's one of those brokers that when he sends a package, it goes to the top of the list. Let's look at it first. And the inquiry actually came in on a Saturday morning, and I happened to be sitting around, I don't know, watching TV. Wife was out working. The kids were asleep. So I was like, hey, man, I'll take a look at this and see what we got. I'll get him a needs list back, right? And so I opened it up, and the package was fully complete. He had already put together a debt service coverage based on our debt. He had all the financials in there. He had what the exit strategy was. The borrower was a construction company who was leasing his current space, and he wanted to buy it. They had an SBA loan, but the timing didn't work out. And if he didn't close in time, he was going to have to pay some big penalty. And so the broker literally had everything put together that we could possibly want on the front end. I sent him an LOI. I believe that afternoon we had the LOI signed. Monday morning we had the deposit in so we can start ordering our reports, and we closed in about 2 weeks. So if you were to have a perfect success story about how a broker sets up a loan package for his borrower, this would be it.
Yeah. Well, that's exciting. I know who that broker is, and it doesn't surprise me that, that's the type of deals that he sends in, and we've certainly enjoyed working with him. And, he was part of our mentoring program that we had, predates our academy, and I'd like to think that we helped him. He was going to be successful anyway, but I think we helped him in structure and how to put deals together. So really, really appreciate him, and glad that he uses our company to do deals. I think one of the key points I'd like to say there too is we funded that deal in 2 weeks.
Yep.
So that's can you fund deals fast? Yeah, we can. We can fund. Our average closing time used to be 17 days. It's gone up a little bit, but not much. But it all depends on when we get the proper documents in so that we can proceed and move on.
Yeah, and I mean, it's important to note too that everything, sometimes when you fund a deal quickly, everything lines up perfectly. Boom, it's easy. We ran into some hurdles. The borrower had to, move a property into a different entity. Like, there were some things that we had to overcome. But with the broker's help, we were able to overcome it quickly and stay on schedule. So you're always going to run into issues when you go from LOI or term sheet to closing, but it's how do you overcome those issues? And with his help, we did it pretty smoothly. So.
Yeah, that's true. Anything else you want to talk about on the our topics for today about, any advice to brokers, they're out there in the market on submissions of deals or anything?
Yeah, I mean, I just, maybe to recap, if there's something that you're not sure about, ask that borrower the next question before you just send it. You only get one chance to make a first impression. So when you send a deal to a lender, make sure it's a great first impression. And if you see problems, highlight those problems. If there's a past bankruptcy, hey, you had a bankruptcy 2 years ago, can you overcome this? Because if you hide it, it's going to come out later. And then maybe instead of spending 2 days, you spent 2 months on this deal that you thought was a deal, but now it's not going to fund because the lender found whatever it is that you didn't want to talk about. But a lot of times, if you talk about those things on the front end, you can overcome it, or you get that quick no, so you can go to a lender who can overcome it. So I would just say, ask more questions, make sure you know the full story before you send it to your lending partner.
Yeah, I think I wish I could get across to brokers today, that there's no more hiding things. I mean, there are too many tools out there for us as lenders to use, to find out what's really going on, in a deal. And then all it does, at least from my perspective, when we have to find something in underwriting, when our credit team finds something that the broker didn't tell us and the borrower didn't tell us, it makes me immediately think, what else am I missing?
Yeah.
What else is out there that he hasn't been honest or truthful about? So it's better to tell it up front. And then that way we can, like you said, give a quick no or yeah, we can live with that, and move on from there. Yep. So, well, Jeff, I appreciate your time today. I did want to close with reminding everybody that the Commercial Loan Broker Association Convention and Expo, the registration is now open. Don't forget, we're in Indianapolis, November 2nd, 3rd, and 4th. We're really, really excited about this year's event. We've made some huge changes to our agenda. We feel like that we did some surveys and some folks came back with some ideas. They wanted more time in the exhibit hall. We've made that happen. They wanted more concise and better, breakout sessions, and we've made that happen. There's going to be fewer breakout sessions, but they're going to be more important to what we're trying to do, in growing our business and as brokers and as lenders as well. So we're really excited about that. You need to take advantage of the early bird pricing. You can check us out at CLBassociation.com. So this has been Terry Luker with Jeff Luker today for Deal Talk. Have a great day, everybody.
All right. Thank you.